Time now for a look at today's business news. For that, we're joined in studio by our business editor, Stephen Carroll. And Stephen, we're going to start with what is perhaps the most anticipated dinner date of the year.
Perhaps if you're sad people like me and you think this is very important. However, it is. But will Presidents Trump and Xi find a way to end the trade war over some Argentinian steak? Well, the leaders of the world's two biggest economies will meet on Saturday on the sidelines of the G20 in Buenos Aires. The White House's top economic advisor says the United States is open to a deal that will end the trade dispute, but that President Trump is also prepared to increase tariffs on Chinese goods if there's no breakthrough in the talks. Discussions between Washington and Beijing have stalled over thorny issues, including theft of intellectual property and forced technology transfer by foreign companies who want to do business in China. Let's take a listen to what that White House advisor Larry Kudlow had to say.
In his view, there's a good possibility that a deal can be made, and that he is open to that. But having said that, some caveats, as always. Certain conditions have to be met with respect to fairness and reciprocity, as we've said many times.
Well, the hope that perhaps a deal could be done to end the trade dispute, giving the market some cause for optimism today. Still a bit of caution in the air, though. Feeling among many investors as if this meeting doesn't go well, that we'll see an escalation, which would be bad for businesses. Optimism, though, winning out on the Asian markets and trading today. China finishing up 1%. The Hang Seng in Hong Kong up over 1% as well. Gains too in Tokyo and in Seoul. On the European markets, also shares opening in positive territory. Car makers seeing somewhat of a recovery. They fell sharply on Tuesday after a report that the United States could impose new tariffs on European car imports as soon as next week. Some recovery, though, in those shares today and gains across London, Paris and Frankfurt. On the currency markets, a euro trading for just under $1.13 and for 88.5 pence sterling. Well, the US president has lashed out at General Motors over its announcement that it's closing factories in America. He says they're now looking at cutting all subsidies that go to General Motors, including for electric cars. The shares in General Motors falling after these tweets, although it's not clear what other federal subsidies, if any, General Motors actually benefits from. At the federal level, the electric car subsidy is a tax credit that goes to the consumer, not the car maker. For its part, General Motors hasn't commented on the tweets, just saying that it appreciated the action this administration has taken to improve the competitiveness of US manufacturing. Well, car makers watching that dispute closely, particularly what effect it might have on those electric car subsidies. This as many of the biggest players in the industry gather for the Los Angeles Auto Show to show off their latest plug-in models. Peter O'Brien has more.
At the 2018 LA Auto Show, it seems like the future's already here. Car makers are flaunting ambitious goals to produce more electric vehicles, in particular SUVs and crossovers. Rivian is debuting an all-electric pickup.
The truck segment has not seen any innovation for the last 50 years, and it has largely been unchanged in the way it looks, in the way it performs. And what we are doing with our pickup and our technology is redefine the segment and take it to the new audience.
But the market share for plug-in passenger vehicles in the US remains low. Last year, electric vehicles accounted for just over 1% of all cars sold there. Americans' appetite for big cars might prove a barrier to change. General Motors is the country's largest automaker, and SUVs and similar vehicles now account for 3/4 of its sales, up 15% from 5 years ago. The trend's driven by low fuel prices. The national figures are also skewed by California, which is leading the charge. The state accounts for about half of all plug-ins sold in the country since 2008. Its program requiring car makers to sell a certain percentage of zero-emission vehicles has been picked up by 9 other states. The federal government also offers an incentive. Currently, for the first 200,000 electric vehicles a company sells, the customer gets a tax credit of $7,500. But Tesla has already reached this limit, and General Motors may do so by the end of the year, so the incentive could disappear.
Finally, from me, Microsoft briefly became the world's most valuable company again on Tuesday as its share price increased. It's been, in fact, rising fairly steadily for the past 5 years, tripling in value. But it's been nearly 20 years since Microsoft last held that pole position. Apple's been there for the past 7 years. But the iPhone maker coming under pressure from investors over fears that its sales of the iPhone may have peaked. On Tuesday, they took a tumble after President Trump said in an interview that iPhones could be affected by any new tariffs on China. Nice for Microsoft to have its moment in the spotlight, though.
Absolutely, always up for the underdog. And again, a concentration on that dinner date on Saturday. Stephen, thanks a lot for that business update.